right, so now we're going to look at how to complete the accounting worksheet. First, and there's going to be a bunch of steps, you need to record the journal entries and post them to T accounts, right? The journal entries are your source information for all of the other work. So let's go through an example. Let's say we buy $100 of supplies on account. Let's record the journal entry for that. What would we debit? What would we credit? Well, we would have to debit supplies and credit accounts payable for the $100. So that's our source. Then we have to take that information and post it to the T account. So we've got a supplies account and the accounts payable account. We debited supplies, so we put $100 on the debit side of the T account for supplies and $100 on the credit side of the T account for accounts payable. Second step then is after you've written up all the journal entries and you've posted all of those entries to their respective T accounts, then you have to determine the balance in each one of those T accounts. So for a cash account, for example, completely unrelated, we see a bunch of items posted. So there are 5 different entries that happen to affect cash. On the debit side, we have $1,000, $750, and $250 from transactions labeled A, B, and E. And on the credit side, we have a $375 and a $4.25 for transactions C and D. And I highly recommend tracking by letters or dates or transaction number in each T account so that if you make a mistake posting, you can go back and sort of find your mistake. So after all of those are posted, we then have to come up with the subtotal for the debit side and the credit side. And so we have $2,000 of debits and $800 of credits. That means we have a $1,200 debit balance in the cash account. $2,000 of debit minus $800 of credit gives us a $1,200 debit balance. So we go through that process for all the accounts and determine what their balances are. And then third, we're going to transfer those T account balances to the debit and credit columns called the unadjusted trial balance, right? Sometimes it just says trial balance, but really, more technically, it's the unadjusted trial balance. That's our starting point. So the trial balance looks like the first column has the account, and then it's just a listing of all the different accounts, and then the first 2 columns after that, debit and credit, would pertain to the unadjusted trial balance. And each one of the accounts listed will have one balance. It's either a debit or a credit. You don't put the sum of the debits and the credits. That's why we did step 2. You come up with the balance in the account, and then you post it to the unadjusted trial balance. And it's important to realize that the sum of the debits have to equal the sum of the credits. So if your unadjusted trial balance is out of balance, then you've made a posting error somewhere. Either a journal entry was out of balance or you posted incorrectly. And at that point, you have to stop and go back and you have to find it. A trial balance must balance. And you have to show the totals at the bottom of every column to sort of prove it. Then we can go on to step 4, right, the 4th step. We're going to create the adjusting entries and we're going to post those to the T accounts and post them to the adjusting entry columns of the worksheet. So let's look at an example. So let's say we have the supplies account and we have $400 in the unadjusted trial balance column. So it's a debit balance, it's an asset. And then under the adjustments, we record a credit to supplies of $170. It must be that we used supplies worth $170. So then a debit of $400 less a credit of $170 means we have $230 left in the adjusted trial balance column of the worksheet. Now I've put these little columns by color to show that there's a debit and a credit that go together for the unadjusted trial balance. There's a debit and a credit that go together for the adjustments, and then there's a debit and the credit column for the adjusted trial balance. And in each case, the sum of the debits has to equal the sum of the credits. If not, you're messed up. You've got a mistake. You got to go back and find it before you can move on to the 5th step. So once the adjusted columns are completed and in balance, then we're going to transfer those account balances to the appropriate financial statement columns, right? There's going to be a debit credit set for the income statement, and then next to that a debit and credit set for the balance sheet. Now, this is the first time where the columns aren't going to be in balance, right? The columns, the difference between the debit and the credit on the income statement is going to be the net income or net loss. And that difference should be the same that we see in the debits and the credits on the balance sheet. We're going to look at an example in a couple more slides, and then you'll see what I'm talking about. We are almost done. The very last step of worksheet preparation after you've created the financial statements is to prepare the closing entries and post those to the T accounts and post those to the closing entry columns of the worksheet. There's a whole separate tutorial on the closing entry process, right? And the post-closing trial balance is the last two columns, debit and credit columns on the worksheet, and they should have the debits equal to the credits. The capital or retained earnings account should now be updated to include the net income or loss, and there should be no balances, nothing reported on any of the income statement accounts. And if we had dividends, nothing in the dividends account as well. So let's look at what a worksheet looks like. This omits the closing entries and the post-closing trial balance, but I think it gives you a very nice sense of what a finished and correctly prepared worksheet should look like. All right, so the first two columns are the trial balance. We would really call that the unadjusted trial balance. And notice it's fairly short. And then when we get to adjustments, we see little letter references for each one. So there's a debit of $1,000 for insurance expense and a credit to the prepaid insurance amount column, or row I should say, for $1,000 in the credit column. Each one of the entries should have a debit and a credit so that it shows that the adjustments balance. They're referenced by letter. And if we have to add new accounts, we start to list them below the area that took up the space for the unadjusted trial balance. And then we just carry everything over. So trial balance plus the adjustments gives us the adjusted trial balance. And then notice the two columns for the income statement and the two columns for the balance sheet, where cash is an asset, so it belongs in the balance sheet. So that $1,500 balance gets transferred across to the debit column of the balance sheet. But consulting fees earned is a revenue account, and it goes from $260,400 in the adjusted over to the income statement credit column. Now, when we look at the bottom of the income statement columns, we see that there's a difference of $32,800. That represents net income, right? If we look at the revenue of $280,400 and the sum of all of those expenses, $247,600, we have a difference of $32,800. That is the net income for this company. If we look at the difference on the balance sheet columns, lo and behold, we have exactly the same difference of $32,800. And that net income will eventually get updated to the company's, in this case, capital account, right? This is a sole proprietor where they have a capital account and a drawing account. If it was a corporation, it would go to retained earnings. And so this is what a finished worksheet looks like. Hopefully this gives you a good sense of how to proceed for the worksheet assignment.